Okay, hi
Do your
everyone.
thing.
Hasn't seen me today yet. Just open the file. Okay. So we are here to discuss the U.S. ADP Non-Farm payrolls or employment change, which will be out in about 10 minutes from now. So me and Max, as you can see here on the screen, are here to cover it for you. As you can see here on my screen, the current forecast stands at 193,000, while the prior figure stood at 257K. Here the question is actually is the case for is it the case for optimism in the U.S. economy, or is it the optimism hanging by a thread? Anyway, today's estimate of private payroll for January offers this week's initial two-part clue that concludes with Friday's official numbers from the Labor Department. Every jobs report is essential reading these days, but the stakes are especially high with the January figures in the wake of the last week's news that the fourth quarter GDP stumbled sharply, leaving the macro trend close to stall speed last year's close. Let's talk also about the historical movements of the indicator and also the forecast. I would like to remind you that strong numbers from the U.S. Labor Department's labor market helped convince the Fed to raise interest rates in December, but employment numbers have been lukewarm in early 2016. So at the current moment, ADP employment change for January is expected to come out, as I said before, at 193, while the prior was at 257 the last month. The markets are actually braced for weak ADP reports, and if the indicator does indeed sleep badly, traders can expect the dollar to take a hit during the North American session. Employment numbers will be closely monitored by the Fed, which will have to decide if the economy is strong enough, to take another hike in March. In the heady days following the Fed's historic rate hike, there was talk of up to 4 rate hikes in this year. However, it is highly unlikely given current economic conditions and the collapse of oil prices, of course. Talking about the annual pace, if it really slips below the 2% in January, the dip will mark the first time since the summer of 2013 that payrolls fell short of this round number of 2%. Would it be a sign of trouble? Actually, we will all hold the breath until the official data from Washington comes on Friday. Here it's all. Let's to the second part, which is the experts' opinions on the matter. And according to their views, we have the Bloomberg survey summary as always, where the median estimate stands at 193,000. Average estimate is 196.16. High estimate is 295, and the low estimate is 160,000. While the total number of estimates this time is only 44, however, it should make a difference. Anyway, a little bit of good news is that the economists are looking for a not a decent, but still a growth. However, it is going to be weak. But according to econoday.com, their consensus forecast is at 190,000 increase in private payrolls in January. In fact, the projection presents a substantially lesser gain compared with the advances, as I said before. But it's another stage, another modest but still growth. And I don't have time left, but still I have to shortly mention the Dukascopy community member sentiment, where the traders actually this time were bullish on the USD Japanese yen with versus 41.58% bearish votes. And Max is already angry at me. I'm taking his time. Anyway, please proceed with your topic.
Thank you very much, Kate. Hello for the third time today, everyone. So speaking about the technical analysis for the US ADP employment change, which is actually the first indicator of the official US Labor Department's employment gauge, as Katerina has already indicated. By the way, usually the ADP employment doesn't say exactly what the official numbers will be, but usually it is able to indicate the trend based on the historical data. So in case we see today a decline to 193,000 pace of jobs growth in January, it is also likely that the official one will also see a decrease on Friday. And also considering that today markets expect quite a sharp decline from last month to 157,000, we have the negative surprise trading strategy today, also because the recent market turmoil and decline in oil prices and equity markets also could hammer the pace of jobs growth in the United States, but we will see that in some 3 minutes from now. Speaking about the dollar-yen currency pair, for the moment it has quite a bearish sentiment, continues to have 64% of all open positions are bearish at the moment. And also if you have a look at the pending orders, which usually indicate the future sentiment for the pair, they are also going short on the US dollar against the Japanese yen in both 50 and 100 pip ranges from the current market price, which by the way is 119.38 for the moment, which actually coincides with the trend of the last 200 minutes of trading of this particular currency pair, meaning that it wasn't that volatile in the last 3 hours. Speaking about the possible market reactions after the data is released in 2 minutes from now, let's have a look at the previous ones for the dollar Japanese yen currency pair. And as you can see, the average reaction was just 17 pips, but the reactions were especially strong last month when the actual data surpassed the prediction quite strongly, and the reaction reached 29 pips for the dollar-yen currency pair. And in case we also have a disappointment today, it is also possible that the currency pair will decline more than the average of 17 pips for the last 5 months. So the first take profit level and the first support zone is placed right now at 119.20, which is 20 pips below the current spot, and it is also the 4-hour S2 support line. And in case we have also the more softer than expected data, then it is possible that the dollar will decline even more, and for that purpose the second support is the daily S2 at 119.09 right now. On the other hand, if we have a positive surprise from the data, the first resistance to stop the dollar-yen will be the monthly pivot point, a very substantial, very formidable resistance, which is placed at 119.62. Since I have just half a minute left, let me mention the technical indicators which are pointing also to the downside on the 30-minute time frame, while awaiting possibly the negative numbers in 15 seconds from now. So let's just wait for the numbers to come out, to be published in the chat section, and hopefully we will see the first initial market reaction from this particular observed currency pair. So we're still waiting for the numbers, which are released pretty much actually in line with expectations, somewhat better than expected. So US economy created 205,000 jobs in January It is based on the ADP, of course, employment gauge. It is more than expected at 195,000, but of course it is down from 257 we have seen in December, which makes sense because that number was a kind of the extraordinary one. At the same time, as you may see, the reaction is very soft for the moment for the dollar-yen currency pair. We see actually no movement to the upside that is very strong one, so just a couple of pips to the upside. Possibly we will see some development a bit later from now when market participants actually go deeper into details and try to access the data to predict the official data from the US Labor Department later on Friday. Okay, I guess that for now that will be all from my side on the technical analysis for this currency pair, for the dollar-yen, and for the ADP employment change. Thank you very much for your attention. The next data release to cover will be tomorrow, which is going to be the Bank of England's rate decision, the very important one, of course. So we will discuss that in full. See you tomorrow, and back to you, Kate.
Thank you, Max. Well, guys, you can still see the modus, but still a reaction on the screen. And the numbers came out slightly better than expected, but mostly in line, of course, with expectations. Anyway, we are finally saying bye to you. I bet you're already tired of our faces. Third time for the day already. So, Doc and Jignash, gentlemen, you are welcome to proceed with your topic. And yeah, so bye.
Bye-bye. Thank you, guys. Well, Janash, too bad. We're only about 200